Hey guys, so how was your portfolio today? If you're like me or almost any investor in America that's not a bear, probably not great. I mean, we're dealing with the S&P 500 down 1.7%, like the Dow down 1.78%, and then we get the Nasdaq. Now, this was even worse earlier in the day. It was hitting 500, I think, maybe even 600% or 600 points loss. I mean, it recovered to a 2.19% loss, but that is just terrible. And if we look at the various stocks on my watch list, like nothing's great. Whether you're in crypto, whether you're in, growth companies, value companies, everything is just terrible. And let me show you this right here. This is my Fidelity portfolio. If you look at my video yesterday, I thought I was doing bad yesterday, Sunday. I am getting wrecked. I got hit down to 27.7% gains. Now, that's still a lot, but yeah, this was not a good day in the stock market for me. Now, there are a number of possible reasons for this. The first one is the fact that stocks in September usually aren't great. I mean, stocks in September usually are at a decline, so it's a bad month for stocks anyway. Then there's also the whole Fed taper thing, which is coming up. I think the Fed's going to announce something regarding doing that or not doing that. I think Tuesday, maybe Wednesday. I think Tuesday though, but we'll find out. Now I'm going to make a video. Now I made a video about the Fed taper and how disruptive it's going to be, especially for emerging growth companies. And I think I'll link that up there. I'll probably link that in the cards, but you can watch that if you want to. It's like when the taper hits, like you think the stocks are getting crushed now, it's gonna get even worse. So I'm gonna make a video later this week after the Fed taper decision happens or not happens to go over the fallout of that. But the main reason, one of the biggest reasons, at least circulating in the news, is the whole Evergrande thing. And that's what we're gonna talk about today. Now, if you're like me and you barely even knew what Evergrande was before this whole news broke out, there is a YouTube video out by a channel called How Money Works. And in my opinion, this explains the whole situation, what the company is, what it does, how it got itself in this mess. It does it very concisely so that even dumbasses like me can understand. And I think it does it from, in my opinion, as unbiased of a way as possible. A lot more unbiased than I'm about to be, at least. I highly recommend you watch this video, come back, and then, of course, watch my video. Now, my complete amateurish understanding of this, and I'm not going to do it justice, I'm going to butcher the understanding 100%. You should really go watch that How Money Works video first. But my understanding of it is that Evergrande is a major real estate company in China. And how it works is it takes money from local investors and foreign investors, both retail and institutional investors. It takes that money and invests it in real estate. Now, in China, like you don't own property, you lease it from the government. So it leases it from the government and it sells it, and that's how Evergrande makes money. And that's it in a nutshell. And this is a business model that I'm not going to defend. This is a very risky model. It takes money from amateur investors and uses that to fund its business. And my understanding is that it's been in debt for a while. However, thanks to its cash flow, it's been able to stave off that debt, to exist and stay ahead of the game. And for a while, it was doing really, really, really well. But I'm not going to defend that at all. That is a very, very risky model, and I think that's crazy that all that debt, all that company, and all that debt is completely dependent on incoming money to save itself. That sounds like a scheme of some kind, but whatever. And I'm not going to defend it at all. However, as someone who believes in voluntary exchange capitalism, I think that company should be able to exist as it is. It should be able to conduct its very risky, very, very, very risky business model. And I think that investors, retail and institutional, should be able to invest as much or as little as they want and bear the full brunt, good or bad, of the consequences. Now, if Evergrande was to fail on its own merit and domestic and foreign investors lost their money, I mean, that's the way it works. That's voluntary exchange capitalism. That's the free market doing its job. And I wouldn't even be making this video. But that's not the case. So basically what happened is last year, China introduced some new regulations related to borrowing costs and debt and cash flows and stuff. And ultimately that drastically impacted Evergrande's entire business model. And ever since then, now yes, this has been a year-long thing. Evergrande has been, getting worse and worse as cash flows has been diminishing. And basically, at any point, any time now in the near future, the company is going to start defaulting, and then things are going to get real, especially in China. Now, all that you can get from watching that video I recommended or just watching the news. So why am I even making this video? Well, that's because I have some thoughts on this that I haven't really read anywhere else. So the first thing I want to talk about is, why did China make those regulations? Now, I did read in the news that China said it was doing it to protect the people, but, I mean, we know that since last year, and especially this year, I mean, China has been cracking down on anything that's been a private business, from tech and now real estate. And the regulators aren't stupid. Like, Evergrande has been a major player in China, a major real estate player in China for years, maybe decades. I don't know how long, but it's been long enough. And when China implemented those regulations, they had to have known at the time that those regulations were going to cripple the company. Now, they may or may not have known the scale of, how it's going to cripple that company, but they knew that those regulations were going to cripple Evergrande. They had to have known that. I mean, just look at this here. Now, this is an article from August of this year, and which just talk about Chinese authorities meeting with Evergrande, telling them that they need to resolve its debt risks, and they're doing this after China crippled the company by implementing those policies. Like that's like someone walking up to a guy, breaking its kneecaps, and then demanding that guy get up and freaking walk. Like, that is absolutely terrible. Like, I do believe that Evergrande needs to resolve its debt risk, but with China crippling the company the way it did, with the policies that China knew, almost certainly they had to have known would cripple the company, that's a problem. So, armed with that knowledge that, Evergrande is folding, and as a direct result of China's regulation, I mean, what's going to happen when, we know Evergrande is probably going to default. It could try to stretch it out for a while, but unless a miracle happens, the company's going to default. And what's going to happen then? Is the government going to step in and do something about it? Now, in my personal opinion, I hope they do nothing and let the free market take its plate and, run its course. Now, I wish those regulations didn't happen in the first place, but so if I had 100% of my wish, I wish they could remove those regulations so that the company could succeed or fall on their own merit. But hopefully the government does nothing. But what the tinfoil hat me thinks is going to happen is, I think, after Evergrande defaults, I think the China government is going to come in and save it. That's just my speculations. I have no idea if I'm right or wrong. By the time this video comes out, or by the time you're seeing this tomorrow or the next day, China may have already responded. But I'm hoping it doesn't turn into a whole situation where, the Chinese government takes over another major private business, kind of like it did with Ant Group. I'm hoping that doesn't happen. I'm hoping I'm going to be proven wrong. But oh, and one more thing: the worst part is, at least as far as I'm concerned as an investor, or used to be concerned as an investor, is what is China going to do about the foreign investors? Now, let's say China does something other than nothing, and China does something other than watch and let things unfold, and it steps in. Maybe it bails out the domestic investors, retail and institutional investors, the ones in China, but what is it going to do about the foreign investors? Because it doesn't have to do anything. I mean, there's a possibility it could just say screw those foreign investors, and everyone that dumped all that money, just like they did in other Chinese stocks, might get screwed. Now, I hope that doesn't happen, but we'll see how it goes. But anyways, take care, have a good day, and eat your vegetables.